Kia ora anō, this is Checkpoint and I'm Lisa Owen. It's time now for business news with Nicholas Poynton. Nicholas, tell us about this one company that seems to be bolstering the farming sector.
Yeah, look, the rural supplies company PGG Wrightson, they've lifted their full-year profit guidance for the second time this financial year. It's now forecasting a full-year underlying profit of about $57 million. Earlier this year, they were projecting that to be around $52 million. And look, compare that with last year. That's nearly a 50% increase in what was happening last year. So what's changed this year? Well, they say all this positivity is being driven by strong demand for its rural and fruit-fed supplies. That's particularly in the horticulture sector, coming to a very crucial spring season. There's also been healthy trading off its livestock volumes. And I thought this would be of interest. There's been a lot of demand for rural and lifestyle real estate property, which is one part of its business. We've seen previous reports that city dwellers, city folk, because of they're not probably able to go overseas to go look at big overseas trips, they may be looking to go buy a slice of New Zealand, looking to rural New Zealand, snapping up property there. So the company's CEO says they will make a call about whether they return paying dividends when they put out their half-year result in February. But this is a company that received $4 million from the wage subsidy scheme. And it seems that there was a bit of a backlash when companies took the wage subsidy this year, then proceeded to pay a dividend out to shareholders. But I'm wondering how people would feel about a company returning to paying dividends, especially when they're expecting to make a 50% increase in their full-year profit on the previous financial year.
Interesting. Okay, let's go to the RBNZ, talking about LVRs, and this is bringing them back in March. Are they going to make any difference?
Well, by the RBNZ own account, they say that the reimposition of loan-to-value restrictions may only knock about 1 or 2% of house prices, which is probably not the sort of outcome that those people out there who've been crying for some sort of change, some sort of policy to address this, have probably been hoping for. But remember, for those listeners who may have forgot, that these LVR restrictions, they are about sort of ensuring the financial stability of our banks.
So it's needing you to have a bigger deposit when you go out shopping for a house.
Yeah, so look, when these LVRs do come back in, they'll return to their former levels that they were at back in April. So that means that retail banks will be limited to no more than 20% of new lending to owner-occupiers with a deposit of less than 20%. And for property investors, no more than 5% of its new loans can be to property investors who have a deposit of less than 30%.
Well, yeah, here's the thing, Nicholas. Isn't it just like they've, honked the starter's horn for everyone investors and home buyers to get out there before March when the LVRs get reintroduced? Would it not create more demand in the short term?
Well, that's exactly what I thought. I wonder if we'll see people there who are sort of scrimping and saving, trying to get that deposit together. Probably, are the type of people who don't have a 20% deposit, which is a significant amount these days, that they were probably hoping to get in while LVRs were scrapped. So I wonder if we'll see people sort of racing to the banks now in the run-up to March to try and, get their first mortgage.
Okay. Have you got some numbers for us from the market?
I do.
On a Post-it note, no less.
I know, I've gone downhill, haven't I? So the NZX is up 64 points to 12,719. Our dollar is at 70.4 US cents, 95.8 Australian and 52.7 British pence.
Thanks, Nicholas. Nicholas Poynton with our business news there.